Welcome back to Investing Talk Podcast, and Merry Christmas.
Merry Christmas to you too. Today we're looking at Novo Nordisk.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
All right, so Novo Nordisk. This is one of the most remarkable growth stories we've seen in a long time. It's a company that is fundamentally changing how we think about major health issues: obesity, cardiovascular health, even liver disease.
Absolutely. And the core driver, well, hasn't changed at all, has it? It's all about the relentless, just unprecedented demand for their GLP-1 therapies. We're talking Ozempic, Wegovy, Rybelsus. So what did the Q1 2025 financials really tell us about that demand?
They confirm the company is struggling to keep up, but, in the best possible way. The latest Q1 results are just staggering. We saw DKK 118.9 billion in revenue.
And just for context, DKK is the Danish krone, so that translates to roughly, 17.1 billion US dollars?
Exactly. And that represents a 29% increase year over year. Almost a third more revenue than the same time last year.
That's the kind of growth you'd expect from a small biotech startup, not a pharma giant of this scale.
Yeah.
But what's really fascinating here isn't just the sheer volume, it's the efficiency.
That's where the real financial muscle is. If you look down the income statement, the profitability is, frankly, incredible. In Q1 2025, their gross profit margin expanded to 83.8%.
83.8. Just think about that number.
For every dollar they bring in, almost 84 cents is left after the direct manufacturing costs. And that's up from about 80% the prior quarter.
Which just points to immense economies of scale as they ramp everything up.
And that kind of operational excellence translates directly into a huge pile of cash. Their free cash flow surged 48% year over year. It hit DKK 42.1 billion in the first quarter alone.
The 35.4% free cash flow margin. I mean, that is just a powerful cash machine they've built. And it's critical because that cash feeds two strategies at once, right?
Right. The first one is obvious: meet the insane demand. So they're funding aggressive manufacturing expansion all over the globe. But the second part is about rewarding shareholders. They're promising 10% or more in annual dividend growth through 2027 and buying back billions in stock.
Okay, so that brings us to the next critical question for you, the listener. With margins this high, with demand this insatiable, why hasn't everyone caught up? What is this competitive moat that keeps Novo Nordisk so far ahead of the pack?
It's a moat with 3 pillars, and it creates a barrier that's both legal and physical. The first pillar is intellectual property, the IP. Their core molecule, semaglutide, is patent protected in the U.S. until 2031. But their delivery systems, the pen injectors that make it so easy to use, those are protected even longer, all the way to 2035.
That sounds strong, but, we've seen patents on billion-dollar drugs get challenged before.
That's a legitimate concern, and that's where the second pillar, the physical moat, really comes in. It's their manufacturing scale. They don't just hold the patent, they control the supply chain. They control over 90% of the global production for the active ingredient, the API for semaglutide.
So even if a competitor somehow wins a legal challenge, they still can't
make the drug efficiently. Precisely. Building these complex API facilities takes years and billions of dollars. Analysts figured this gives Novo Nordisk at least a 24-month lead on any rival trying to match their volume.
And we can actually see that moat in action when we look at their rivals. This brings us to that third pillar, competitive weakness.
You look at Eli Lilly's Zepbound, which is a fantastic drug, but they have struggled immensely with production. We saw reports that their Zepbound production was cut by as much as 15%, directly because of these API supply issues.
They have the drug, they just can't get it to market fast enough.
Right, and that weakness lets Novo Nordisk just dominate. They hold something like 68% of the massive US GLP-1 market.
That financial strength, that moat, it all paints a very powerful picture. But we have to be honest here. The biggest strength might also be the biggest vulnerability.
It's the concentration risk. Absolutely. 88.7% of their total sales come from that one segment, metabolic diseases, which is almost all semaglutide.
So something went wrong with that drug class. The whole story is at risk.
It is, and that's why their push into new indications is so critical for the long-term story. They can't just be a weight management company forever.
So where are they pushing now?
They're strategically moving it from just being a drug for diabetes and weight loss into a drug for overall metabolic health. The big expansion area right now is liver disease, specifically NESA-HASH, or as it's now called, MASH.
A massive underserved market heavily linked to the obesity epidemic. What are we seeing there?
They've had positive phase 2 success with a dual agonist, NN0443. It showed a dramatic 14.2% reduction in liver fat.
If they can replicate that in phase 3, that's a blockbuster in an area with basically no good treatments right now.
Exactly. And beyond that longer-term pipeline, there's a near-term catalyst that's all about expanding their existing drug.
Into the younger demographic, right?
Yep. The immediate catalyst to watch is the FDA's PDUFA date for the adolescent indication of semaglutide.
And that's the FDA's deadline to approve it or not. When is that?
It's set for July 28, 2025. This could open up a huge untapped market very, very soon.
Okay, so let's pivot to that catalyst calendar. This is what investors are watching. Q1 earnings were strong, but what are the future events that will shape the next few years?
The big one is their Investor Day. It's scheduled for May 14th and 15th. This is where we are keenly anticipating management to give firm, long-range guidance for 2025 to 2030.
And what are you hoping to hear specifically?
Specific volume targets. Analysts are looking for a target of hitting, say, 12 million patients globally by 2027. And crucially, we need their detailed strategy for U.S. insurance coverage. How do they get Wegovy covered by the big insurance plans, not just paid for out of pocket?
Right. And they're building this narrative that it's about more than just weight. Which brings us to the AMA conference in June.
That event is critical. This is where they're expected to present real-world data on cardiovascular risk reduction. The anticipation for this is sky high.
And what are we looking for in that data? A specific number?
We are looking for confirmation of a dramatic reduction, potentially 40%, in major adverse cardiovascular events, MEE. If those numbers hold up, it completely changes the conversation with insurers. It moves the drug from a lifestyle expense to an essential life-saving preventative medicine.
Okay, let's shift to the stock itself. The technicals suggest the market is finally catching up to these fundamentals.
It absolutely is. The stock just completed a classic 7-month cup and handle pattern. For you, the listener, think of this as a long period of consolidation, the cup, where the stock just grinds sideways and shakes out weaker investors.
And that pattern confirmed a breakout.
Yes, the breakout above the $120 neckline happened in early April and on really high volume. It suggests the stock is ready for its next sustained move higher.
And that was reinforced by another key indicator, the Golden Cross.
That's a textbook signal. It's when the short-term 50-day moving average crosses above the long-term 200-day. Big institutional funds often use that as a key signal to enter or add to positions.
And we're seeing that institutional confidence in the filings, right?
Precisely. Net institutional ownership is up to 78.2%. Big money is conducted here. But, what's maybe even more compelling is the insider activity. The CEO bought 21,500 shares back in February.
And that's significant because
It was the first insider buy since 2022. Insiders have the clearest view, and that kind of personal capital commitment, well, it signals deep confidence.
and the analysts are scrambling to catch up.
They are. We saw UBS upgrade their target to $160, JP Morgan to $155, and they're all basically saying the market is still underestimating the true global demand here.
Which brings us full circle to the bear case, the biggest risk everyone always brings up, pricing pressure. What about the rumors around Medicare negotiation in 2026? Pressure from PBMs.
That risk is certainly real. Governments and PBMs will absolutely push for discounts. But the company has proven this is manageable right now because volume is trumping price.
Also,
Even with some price caps coming in, the sheer volume growth, which was 18% in Q1, it just completely offsets it. Net pricing only fell by a tiny 1.2%. The demand is so overwhelming that the number of units they sell more than makes up for any small price cut.
okay, strong mitigation. Let's circle back to that concentration risk. 89% of revenue from semaglutide. What's the specific mitigation there?
It's their deep R&D bench. They aren't just reliant on this one molecule. They have 5 other GLP-1 or coagonist candidates in phase 2 development right now.
Plus, we know R&D spending is up 15% year over year.
Exactly. So if you tie all these threads together, the bull case is still incredibly strong. This looks like compoundable, high-margin, recession-resilient growth for years to come.
That is a very comprehensive look. So here is one final thought for you to focus on, something that could dramatically shape the second half of 2025. Keep a very close eye on the European Commission decision scheduled for June 2025.
That's the huge potential catalyst outside of the U.S.
It is. The decision is about the reimbursement of Wegovy for obesity across the entire European Union. If the EU greenlights that,
Wow.
that one catalyst could add over 50 million patients to the addressable market overnight. That decision will define the stock's trajectory for the rest of the year.
A huge potential market expansion indeed. Well, thank you for joining us for this analysis. If you want to keep up with our work on key market players and these upcoming catalysts, please remember to subscribe.